function, while also showing the face of different fonts.
Can purchasing property help you increase your affluence? Jim Lineweaver is here to help us get real about real estate as an investment option. Jim is a certified financial planner professional with the Lineweaver Financial Group. Again, welcome back to Golden Opportunities.
Good to see you.
Now, there's something that really feels secure about owning land. But is it really a safe investment?
Well, not only land, but kind of the bricks and mortar that go with it. So what ends up happening is that over time, real estate in a portfolio can work out really well. As a matter of fact, if you look over the last 40 years, the real estate property index has actually outperformed the S&P. And it's actually like 9.3 compared to 8.7. However, it's done it with 50% less volatility. So if you look for people in retirement or so, or building up for their retirement, that may want something like a steady income and just, you don't have to have a lot of exposure to it, but some exposure, it could ride out some of those ebbs and flows in a portfolio and diversify you pretty well.
All right, so does that mean we all become landlords?
You can. So if you want to, you know, fix the heater and I'll get calls until 2 o'clock in the morning, you can.
Not me.
Right, and most people don't. But if you did, I mean, that's not a bad way if you're handy and things along that nature, and it's a good way to accumulate wealth. You can get some nice tax deduction for the depreciation and everything with that as well. And any expenses that you have go against that unit or that entity that you're renting out. So it can provide you some nice tax deductions as well. But if that's something that you didn't want to do, but you like the idea of owning a hard asset, then what you can also do is just hire a management company to do that. So, and unfortunately, you know, if you have something in the Floridas or the coasts and stuff, and you're trying to do like a vacation rental, you could see as high as a 40% management fee, which is huge.
That is huge.
But more in the Midwest, and it's something like an apartment building, if you get a decent scale or something, you may be down to 5, 6, or 7% that you're going to pay that management company. A lot more reasonable to get you also some more cash flow.
To get you off of having to be that active landlord, and it's more of a passive amount of income.
Yes.
So are there other passive type options for those of us who don't really want to spend a lot of time dealing with the property?
There is, and this is where you can touch base with your financial advisor, because there are things out there like there's REIT index we talked about earlier. There's real estate investment trust funds where they're going to go out and maybe buy a bunch of different properties. So a mutual fund will pull a bunch of stocks together. A real estate fund is going to pull a bunch of properties together, and other management may trade like a mutual fund, things along that nature. There are also types of real estate that's for accredited investors, so people with, you know, higher income or asset levels, they might be able to do some more private things compared to what's just out there in the public marketplace. But there is a way to diversify through that, and you can also have some decent liquidity with it too. Keep in mind that some real estate investment trust funds, what they'll do is when they distribute the income, the reason why they can distribute so much is because they get a tax break. If they distribute 90% of their earnings or higher, they don't pay any corporate income taxes. So that's why you find a lot of these can be good dividend producers for people in retirement. Okay.
How about a 1031 exchange?
Yeah, this is where if you've had property, let's say you used that to accumulate your assets and now you're retired and you don't want to get calls at 2 in the morning, what you can do is you could exchange that to maybe another property, okay? Or you could actually exchange it to one of these trusts that I talked about, and then there's no taxes on that. It's called a 1031 exchange. If you identify the property within 45 days, transfer it within 180, has to be done by a third-party entity, so you don't touch the money, then there's no taxes involved in that exchange, and you can still get the income out of it.
All right, last option is all in the family.
It is, yes. These for properties that you've accumulated a good amount over time and you want to pass it to the next generation. There's something called a family limited partnership. So this is where the owners or maybe the parents can retain the general partnership shares, and there's limited partnerships that can go to the kids, and it's a great way to transfer assets and not pay a lot of taxes.
All right, so there's options for real estate for us.
There definitely
is. Sounds good. Real estate just could be the real deal for diversifying your investments. To learn more, give Jim a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or visit www.lineweaver.net. Next,